Busy day for deal making in the AI space. OpenAI adding to its list of circular deals. The ChatGPT maker now taking an ownership stake in Thrive Holdings, which is a company that was launched by one of OpenAI's investors. OpenAI also striking a deal to be one of Accenture's primary AI partners. And Nvidia also pulling its weight in AI deals, announcing Monday that it's invested $2 billion in Synopsys. So as the AI train chugs along, we're taking a look at where the deal making and investments could lead to with Bloomberg Intelligence Senior Semiconductor Analyst Kunjan Sobhani. And Kunjan, we talk a lot about whether or not we're in an AI bubble. Valuation, one part of that story, but also the circular investments that we were just discussing. So how do you view that? Is that just the way these things have to go for now, or does that concern you at all when we look at the vitality, I guess you could say, of the continuation of AI?
Well, so far, when we look at fundamentals in 2026 with hyperscaler capex projection to top $500 billion, and remember, these are the customers which have surplus balance sheet cash, so there is no concern around them being able to spend this money or not. The fundamental view suggests there is no slowdown in demand and spending for AI chips, especially when it comes to the GPU and AI ASIC chips, at least in 2026, and the visibility into first half 2027. A few key items we want to highlight for 2026. We again think Nvidia will likely stay dominant wallet share taker of this spending, but second half 2026 will be key inflection point for other players. One, AMD, this is when their first server rack level solutions will start ramping in data centers. And along with that, we are expecting to see significant AI-based accelerator deployments in second half 26 from both Google and AWS. And this is the first time for external customers. So a lot of eyes will be focused on these ramps.
And it's interesting that you talk about sort of the different paths that these various companies could take, because even looking at the Max 7 players right now, there is clear dispersion. They're not necessarily moving in lockstep anymore. So what does that signal about where we are in this current AI cycle?
Yeah, it's just there are more vectors driving the spend now. You have your sort of the Max 7 or the largest hyperscale cloud service providers, which have a very significant and validated demand and spending capabilities. And then you have these new emerging hyperscalers, the one like OpenAI, right? So a lot of concerns around this revolving financing or recycling revenue and deals are coming from that emerging portion of the hyperscaler, which again is becoming large, so it will be a significant impact. But that impact, if happens to show up, will not be at least in the next year and a year and a half. So it's a more outward pushed concern at this point.
And everyone talks about Nvidia. OpenAI has clearly been part of the investor vernacular recently, but you've been highlighting Marvell, Broadcom as some underappreciated winners. So what are investors missing?
Yeah, like I mentioned, second half will be a key inflection point in terms of unit volumes. We have seen the couple of deals, right? Namely the Google Anthropic and the AWS Anthropic deals, and now some more outlook for more such deals are coming in. So when these large hyperscaler who they have their own AI ASICs are now trying to supply that to the external market, sort of competing with Nvidia, the two companies that gain the most are the Broadcom and Marvell, where the valuations and the fundamental are not fully priced in yet. So we see some opportunities in these two names going forward.
And what do you think has been priced in so far? You've been talking a lot about the 2026 inflection point. Considering where valuations are today, especially among some of those mega cap names, how much is priced in versus what should investors expect to continue to drive some of that growth?
Yeah, so when we look at multiples for the overall AI names, especially large names, they don't seem to be at exorbitantly high levels, but we do think they have priced in the strong growth in 2026 and at least some portion of first half 27 that I mentioned. So at this point, it will come down to execution on the and the concerns are not more towards the spending side, but more on the supply side. Can these new programs like the AMD server rack ramp and the ASIC programs, can they execute? Will they run into some hiccups? And can the end infrastructure, which is the data center infrastructure, keep coming up at the same pace? Because remember, there's more bottlenecks now when it comes to spending, when it comes to power that these data centers need.
And just to keep the theme of the bubble conversation, I was reading a note from Bank of America, and they call this more of an air pocket supported by earnings and fundamentals. How would you describe where we're currently at in the AI cycle?
I think I would agree with that, given what's happening in the macro, the interest rate volatility, and especially this time of the year and the performance we have seen. I think it doesn't seem like it does seem like an air pocket or sort of a hiccup on the way. Again, if the execution on the 26 numbers and first half 26 continue as projected, we don't see significant risk to valuation at this point. However, there has been this expectation set up of every quarter to be a beat and raise. So even a small timing hiccup, which could occur in one of these large ramps, could drive a bit of a volatility in terms of valuation.
And I know you're bullish on the AI accelerators. What specific names within that category should investors be watching?
I think Nvidia and Broadcom remain the top of the mind. But like I mentioned, a few other names that could be interesting from time to time would be Marvell and Astera Labs.
All right, Kunjan, thank you so much. Certainly so much to continue to watch in the AI tech space. Appreciate it.